Datavault AI Inc., which trades on the NASDAQ under the ticker symbol DVLT, is live at $1.59 a share. That is a drop of about $0.04 or 2.5% as we sit here at 9:58 a.m. Eastern Time. And the immediate conventional question would be, why is this small cap AI stock down 2.5%? But that is the wrong question entirely. That is the expectation. The reality, the immediate, shocking insight that you need to be aware of is that this 2.5% drop is just noise. The real story, the one that completely reframes what this company is the press release that hit the wires today. Today, November 11th, Datavault AI, a NASDAQ-listed company, announced that its board of directors has approved the distribution of Dream Bowl Draft meme coins to its shareholders. This is not a joke. An AI-driven data experiences company is airdropping meme coins. And that right there, that single act, is the perfect crystalline example of the war at the heart of this stock. It is a war between a story of a high-tech AI future and the reality of a company that is using the 2024-era speculative playbook to keep the market's attention. Let's establish the common ground, because the expectation for DVLT, the story that is being sold, is incredibly compelling. It is a story so good it has no less than 7 Wall Street analysts covering it, with a consensus buy rating and an average price target up near $7.14. One analyst even has a target as high as $11.55. The story is a masterpiece of buzzwords. This isn't just an AI company. This is a Web 3.0 leader in data monetization, credentialing, and digital engagement technologies. They have a data science division, an acoustic science division. They are, and this is a direct quote, your data quarterback in the Web 3.0 era. They talk about high-performance computing, digital twins, and a proprietary information data exchange. They are, on paper, building the very infrastructure for the next online investment boom. This is the kind of story that gets retail investors scrolling through their Robinhood app or their SoFi Invest platform to dream of finding the next NVIDIA stock or Tesla stock before it's a household name. And the story has proof. They just announced 467% year-over-year revenue growth in their last quarter. They just, as of yesterday, signed a new 5-year lease for a massive 23,000 square foot corporate headquarters in Philadelphia. And they have a $150 million strategic investment agreement on the table from Scilex. This is the expectation, a high-growth, analyst-loved AI and Web 3.0 pioneer on the verge of explosive growth. Now, let's slam into the reality that gives you a $1.59 stock price. Let's pull every single one of those bullish expectation threads and see what they're actually attached to. First, that 467% revenue growth. It's a huge number until you see the actual revenue. In the second quarter, the company posted a grand total of $1.7 million in revenue. That's not a typo. $1.7 million for a company that, even at this low price, commands a market capitalization of over $460 million. This valuation is not based on fundamentals. It is based on a fantasy. The company's earnings per share aren't just negative, they are a chasm at over negative $4.11. This company is burning cash at a ferocious rate. And that new 5-year, 23,000 square foot headquarters, that's a new fixed cash burn of $48,000 per month that they just added to the bonfire. What about that $150 million strategic investment? It sounds like a savior, but it's pending shareholder approval. It is not a done deal. And while they wait for that, the company has also filed a Form S-3, which is Wall Street code for "we reserve the right to sell a lot more stock." which means hanging the threat of massive value-crushing dilution over the heads of every current shareholder. This is not a stock for a stable Fidelity IRA or a Fidelity mutual fund. This is pure high-stakes speculation. And the reality gets even clearer when you look at the company's history. This $1.59 stock has a 52-week range of 25 cents to $4.10. That is not an investment, that is a casino. A range that wide shows you that nobody, not the bulls and not the bears, has any idea what this company is actually worth. This is a day trader's dream on an interactive broker's platform and a long-term investor's nightmare. This company, Datavault AI, wasn't even called Datavault AI until recently. It was formerly known as Wisa Technologies, Inc. This entire AI and Web 3.0 data quarterback story is a pivot. And in the investing world, a pivot is almost always a new story born from the failure of the old one. This isn't a company like Apple stock that has been iterating on a core product for decades. This is a company that has shed its skin and is trying to convince the market its new one is better. This is not a stock that would ever be found in a Schwab Intelligent Portfolios account because the algorithm would flag it as a 5-alarm fire. The reality is that this is a company with a brilliant story, but with financials that are so terrifying, it has to resort to gimmicks. Which brings us right back full circle to the meme coins. When your $460 million AI-driven data experiences company, which you claim is building the future of data, has to announce an airdrop of Dream Bull Draft meme coins to get attention, you are no longer a technology company. You are a hype machine. So what happens from here? What is the bull versus bear framework for a stock this chaotic? The bull case, the expectation, is that the story is real, just early. The bulls are betting that the $150 million Scilex investment will get approved, and that cash is the bridge to survival. They believe the $1.7 million in revenue is the tiny acorn that grows into the $40 to $50 million revenue target they've guided for in 2026. They believe the Information Data Exchange is a real patent-protected platform, and this $1.59 price, a fraction of the $7.14 Analyst target, is the buying opportunity of a lifetime. They'll use their Fidelity mobile app or their SoFi Active Investing account to buy this dip, believing they are smarter than the market. The bear case, the reality, is that this is a house of cards. The bears see the $1.7 million in revenue versus the $460 million market cap and see an absurdity. They see the name change, the buzzword salad of a business plan, and the meme coin airdrop as a parade of red flags. They see the S3 filing and know that dilution is not a risk, but a certainty. They see the $48,000 per month new lease as just another hole in a sinking boat. The bear case is that the $150 million deal doesn't close, the cash burn accelerates, and the company is forced to sell stock at any price it can get, sending it spiraling back to its 52-week low of 25 cents, and then, ultimately, to delisting and zero. The bear case is that this is not an AI company at all, but a marketing company whose only product is its own stock. For everyone watching this, I have to ask, when a company with AI in its name starts airdropping meme coins, does that make you want to buy or run? Comment buy or run below. In conclusion, as we watch Datavault AI, DVLT, churn at $1.59, we're watching a perfect snapshot of the modern market. The expectation, promoted by analysts and the company's own PR, is a $7.14 stock, a pioneer of Web 3.0 and AI, a data quarterback that is just getting started. The reality is a $1.59 stock, a former tech company on its second life with $1.7 million in quarterly revenue, an astronomical cash burn, and a new strategy that apparently involves meme coins. This is not a stock for Fidelity Wealth Management to put in a client's growth sleeve. This is a gamble. It is a pure binary bet on whether this company's fantastic story can somehow manifest into a real business before its terrifying financials drag it to zero. Disclaimer. This content is for informational purposes. It's not financial advice, so don't make any decisions without doing your own research or consulting a professional. If you found this helpful, don't forget to like, comment, and share. Stay smart with your money.